These are the 25 leading economic indicators that we track, if you're familiar with these. And as you can see, going from our indicators in March over to April, as a result of the war with Iran, things are moving a little bit more to the negative side of the dials. Specifically, if we look at the top line, the U.S. economic outlook has slipped a little bit. We're still green. We're still saying it's positive. It's moving in a positive direction, but there is some impact. On the second line, you can see that interest rates, we were expecting to see interest rates coming down a little bit quicker than they are this year. That hasn't happened, so that's kind of slipped into the neutral zone here in April with the war going on. Same thing with fiscal policy. We've got a lot of uncertainty in Washington on how to deal with things with the budget, the government staying open. There's a lot of things in Washington that are creating a little bit of uncertainty here.
Rocky, just a thought there. I didn't even really think about it too much on how much is actually going on out there. Yeah. There's a lot of little things that are affecting everything, but nothing so far that looks like it's going to derail the economic outlook.
No, that's why it's not red. It's just kind of slipping in an uncertain zone. When it's yellow, it's kind of neutral. We don't know if it's going to move further, positive or negative at this point. So it's kind of in between. To get back to the indicators, we're looking at the third line here. The international economic outlook has definitely changed to get a little bit slower growth in the international markets. Obviously, they're even hurt worse by the oil situation than the United States because we have plenty of oil here, but most of the oil for Europe comes out of Russia and the Middle East, so they definitely see supply disruptions going on there, and it is impacting their economy. What we do see in the U.S. as a result of interest rates not coming down as fast as we expected, the housing and mortgage markets are slowing a little bit. Interest rates are staying up on the 30-year mortgage, so we view that as a little bit of a negative movement between March and April. And that can change, though, if the Fed changes positions moving forward in the second half of this year.
Which, again, that's another thing that's going to change this year. We're going to have a new Fed chair at some point.
Yeah, hopefully here at the end of April into May timeframe. He's in the confirmation process, so we shall see. When we look at the bottom line here, inflation is being a little stickier than we expected. Again, as a result of the oil shortage and the price of oil going up, it is having an inflationary impact on the overall economy. And finally, energy costs. As a result of our gas prices going up, you see energy costs have now slipped out of green into yellow. So overall, it's not a negative. It's just a lot of uncertainty causes us to put these dials in the middle in a neutral area moving forward.